I'm Jason Buck, and this is Real Visionaries. I originally grew up in Michigan, and I was a soccer player. I've been fortunate to live all over the world and play soccer all over the world. But part of that, I think, is that hopefully living around the world has given me a bit of intellectual dexterity, so I don't really glom on to any particular philosophy in general. Throughout my career, I've been an entrepreneur. I've also been trading options for the better part of 2 decades in my own book. I figured out, some VIX relative value strategies on my own around 2010, 2011. But all of these ideas have made me think a lot about entrepreneurial trading and managing savings over a multi-generational time horizon. The biggest influence on me was the 2008 financial crisis. So I was a commercial real estate developer, and it didn't matter how good you were as a commercial real estate developer. When global liquidity dries up, everybody's screwed. So the pain of that experience, losing money for myself, for my family, and my friends, it made me set out on this journey to think there had to be a way to hedge entrepreneurial risk. There has to be a way to hedge whenever global liquidity dries up and correlations go to 1 and everything crashes. There has to be a way to provide insurance or ballast your portfolio. Mutiny Funds has been about a decade project for my partner, Taylor Pearson, and I. And the idea behind Mutiny Funds is we felt there's a lot of quality hedge fund niche strategies out there that weren't available to retail investors. So we think about there's large asset gatherers that will build a multi-strategy hedge fund that can really build a broadly diversified portfolio, but retail has no access to those kind of products. So as entrepreneurs, we felt there was a blue ocean there where we could bring that institutional quality hedge fund practices and build out a fund-to-fund structure to give retail access to these kinds of strategies for the first time ever. More importantly, we want to overlay those with global stocks, global bonds, commodity trend managers that can ride those inflationary waves, and a little bit of gold and cryptocurrency in case you have any sort of massive fiat devaluation. So that's what we really try to think about is, how do we really manage savings over a multi-generational time horizon? I think the industry kind of has it backwards when we call them investments. By calling them investments, people make very imprudent decisions with their savings. The thing with savings is you need your savings to be there when you need them most in an unknown future, and you never know when you're going to need them. So what we try to do is build the really boring portfolios. I like to say we build the least shitty portfolios because everybody's trying to tell you this is the best investment right now, but we're trying to find broad, robust diversification for an unknown future, because I don't have a crystal ball. We don't know what the future looks like, and I want to prepare my savings for any future that may come along. On a daily basis, it's very unique to run a hedge fund, and quite frankly, we run a hedge fund of funds, which is a little bit different as well. I always joke with a lot of friends that say, they want to show videos of what it's like for a day in the life of a hedge fund manager. And I know all of them, and I know what we do, and I'd say be very boring. You'd see them in compliance meetings, you'd see them meeting with their lawyers, you'd see them doing sales and all the back office and making sure all their books are correct. It's kind of a boring on a day-to-day basis, but the fun part for me is we run a fund of funds. And by that, we invest in a lot of hedge funds and a lot of different niche asset classes. So the majority of our day is meeting with those hedge fund managers, talking to them about their strategies, and doing a deeper dive into those strategies and seeing how they would operate in a portfolio like ours. So it gives me great joy to talk to these managers, to learn about strategies, also to learn about their backgrounds. So every day is a unique exploration for us. And then we also are constantly working on building these niche strategies into an overarching portfolio. And that's much more art than science. So there's a lot of joy in that, of figuring out how do you put these complex pieces of a puzzle together to provide the greatest quality portfolio for our clients using all these different pieces and parts. And it's almost like running around spinning plates. There's never an easy answer. And so I really like complex problem solving. I think I got overly ambitious with this series because I was trying to have several different through lines, several different themes with putting these guests together. I've met a lot of the members from Real Vision, both online and in real life over the last year or two. And one of the things I did notice is there's a lot of members of the audience or the Real Vision members that are younger people that are trying to trade for themselves, they're trying to be DIY traders, or they're trying to break into the business. So I really wanted to speak to them at some level with this series that I put together. How do you build a trading book if you're just trading for yourself? How do you manage your emotions of losing your own personal money and dealing with your family, or how do you manage those positions? The other thing is, like, if you're looking to break into this business, how do you break into this business? Especially if you don't come from a target school. So I was thinking about those kind of themes about, how do you look at it from basically an individual perspective, but at the same time, I chose guests that have deep knowledge of the volatility space. This time I chose managers that will also take a lot of short volatility trades, which is very different from long volatility, but I want to hear their perspectives. And so the way they talk about their short volatility trades, whether it's Darren Johnson or Euan Sinclair, and even Chris Sidiel is going to put on a bit of short volatility to manage his long volatility convex positions, is it's the position sizing. That's what's the really key for now. As we become more advanced traders or we're looking at institutional allocators, it's what position size do I use for the products I'm looking to implement in my portfolio. The other piece I really wanted to hit on is taking on risk, because these guys are all traders at the end of the day. And that's a very interesting distinction, because we talk a lot about a lot of them are quants, but they're also traders. And sometimes those opinions diverge a lot, because it's one thing to look at the literature, to run the numbers and create, a quant-like profile. But at the end of the day, you have to put on risk, and that takes trading ability. And part of what one of the underlying themes of this series is you can't necessarily look at a back test to be able to trade into the future. And what I mean by that, if it were that easy and you could come up with a mathematical algorithm, then there'd be no edge, there'd be no alpha. Like, that's part of being a trader, is to trade on gut instincts that you've learned from experience, to know that you might have an edge here, but you cannot prove it mathematically. That's where the money's made, and that's why it's usually a very hard transition to go from quant to trader, but a lot of these guys were able to do so, and I find that fascinating. Darren Johnson, I had learned about through my friend Corey Hofstein, and Darren has one of the most interesting stories I've ever seen in my life. So I pride myself on being an autodidact, but Darren absolutely puts me to shame. I mean, it is truly phenomenal. Somebody like Darren shouldn't exist, and it's almost embarrassing to be in the same room with him sometimes. We were at dinner the other night, and I've seen him go at quant-level PhDs and talk to them at their level when he's entirely self-taught. It is a truly phenomenal experience. And what's also interesting to me is Darren is a short volatility trader. And we talk about that and what that actually means, because most of the time we're going to be in risk-on environments. So if you want to have a little bit of joy in your life and you actually want to raise capital, sometimes it's best to be a short volatility trader.
Maybe my research and my backtests are different than other people's, but like when you do basic data mining in Excel or in Python or wherever, and you see the large down days, the most predictive part about those days is more volatility. It's not directional, it's bi-directional volatility. So that could mean a 2% up day the next day or a 3% down day, but it's bi-directional volatility. But for some reason, people attach a directionality to it that it's never been clear to me that that's the case. I mean, and this is sort of a reverse engineering way to think about it, but like if you look at trend following returns and CTAs during times of distress, right? They make their money in bonds and in commodity markets. But if you look at the equity portion, like they don't make any money. It's because of the whipsaws. It's because there's no persistence in direction to the downside.
Darren has very different opinions sometimes than I do. So, and he's very strong-willed in his opinions because he's earned the right to have those opinions. So that's why I really like talking to Darren. Chris Sidiel and I are friends. I've known about Chris for a long time. We actually invested in him from our fund. But Chris Sidiel has an amazing story. Very interesting story, coming from a non-target school to eventually ending up at Penn. But more importantly, he's gone from trading at an institutional level to being able to actually trade his own book and starting his own hedge fund at a very young age.
Some people at sell-side desks, they can't think in terms of alpha generating, right? They're not thinking in those terms. They think in terms of VIG, right? I got the spread, boom, I could do that a million times. Let's keep churning that out, right? Whereas, wait a sec, I could think in this Bayesian process where if, condition A happens, the likelihood of condition B becomes exponentially greater. And if I place a bet on that, that bet could pay out 10 to 1. So I think the more and more that I started seeing these things, I started saying to myself, wow, like there is a lot of opportunity to generate alpha.
And Chris has a great reputation throughout our community, and we all do our best to talk to Chris as much as possible. And his ability to maintain multiple chat streams at the same time is absolutely phenomenal. Euan Sinclair comes from a boutique market-making firm. So it's interesting to talk to him about that history of being a market maker, because it has the highest amount of risk trading. Is another way to look at that is everybody I've seen that comes out of the market-making business is great at managing risk, because you basically only have downside risk. It's not a way of taking a positional options trade or a positional directional trade in the markets. You have investment banks and everybody coming to you and saying, I want to buy these positions or offload these positions, and you have to make a market for them. So you really only have downside risk. So you have to really maintain really tight risk metrics and really balance a portfolio and an inventory of options on a daily basis that are coming to you in a very passive way. That's very difficult to do, but people that come out of that industry have a very tight risk management protocols, but they also are very tight on the back office and all their checklists to make sure all their inventory is correct. So it's great training for discipline, but a lot of times it's not great trading for directional traders to go out then to the buy side and run a new hedge fund. It takes very different mindsets to do both.
I mean, market makers would love to be out to get everyone. I mean, it's like every business person wants to be in a position of power, right? But market makers probably have less power than anyone else. Because like you said, when you're a market maker, you're at the mercy of the order flow. I mean, you're not driving the order flow. You're getting pushed around by it. You know, you're the cork on the ocean. So almost always when people say, oh, the market makers are conspiring or this or that, it's almost always complete nonsense. Market makers have no power to move anything around. And when there's all these, when you see squeezes or pins or whatever, it's almost always the market makers who are hurting themselves by doing this stuff anyway. It's like, I don't know of a single situation where market makers have managed to manipulate a market in their favor.
What's also interesting about Euan is he's a prolific writer. I mean, who has the time, honestly? The guy's published 3 books. But what's interesting is his books are well respected throughout the community. And also there's another thread that ties those together is Darren learned most of what he started initially trading from Euan Sinclair's books. So I think there's a fascinating tie in there. But also, Chris and I both read Euan's books. Like everybody respects Euan's books, but what I also like about Euan is he's one of those rare people that has very strong opinions. But those very strong opinions are earned from experience. But even better, he's willing to voice those. You know, a lot of people have strong opinions, but they're usually cagey about their opinions. Where what I really like about Euan is he'll sit right in front of your face and tell you you're an idiot, you know, and he'll tell you why you're an idiot. But even better, he's willing and he's open to have that debate. And so there's this other little through lines that these guys also are a form of teachers, whether it's on Twitter or through books. They're really helping out the community. All of them have this deep passion for what they do, which is very rare, especially as the decades wear on and you're bringing your lunch pail to that Bloomberg screen every day. This industry can grind on you, but these guys are extremely passionate about trading. That's all they want to do. But more importantly, they spend all of their free time writing and giving back to the community that's given so much to them. And they're all 3 trying to bring up the next generation of traders. Whenever you talk to anybody in the finance space, inevitably the future comes up. And everybody wants to know, what do you think next quarter? What do you think next year? What do you think is going to happen? And it's one of my favorite questions because it gives me my favorite answer that I can jump to right away and say, I don't know. And the thing is, I don't have a crystal ball. If I did, I would own an island, but most likely that island would be New Zealand, right? We wouldn't be sitting here having these conversations if I knew what was going to transpire in the future. But what we do at Mutiny Funds is we build portfolios for an unknown future. We have no idea if we're going to have inflation, deflation, growth, recession, a crash. We have no clue. But we build portfolios to say, no matter what happens, we're going to be able to sleep at night. And it's a very different perspective. Like I said in the beginning, I'm trying to build the least shitty portfolio because I'm trying to manage savings for multiple generations. I don't really care what happens next week or next month or whatever, because I hopefully built my portfolio so it can manage through any of those unknown environments into the future.